Think financial statements are separate reports. They're actually one connected story. It all starts with the income statement. It measures revenue, expenses, and calculates net profit for the period. That net profit increases retained earnings on the balance sheet, but profit isn't the same as cash. The cash flow statement explains why cash increased or decreased during the same period. Together, these three statements help finance professionals understand profitability, financial position, and liquidity, the complete picture of a business. You've completed our financial statement analysis series. Next week, we'll explore the IFRS standards that shape these financial statements. Subscribe to AI Finance Hub and continue your learning journey.